Do you think it was a great trade? Now, obviously, you might say, nah, it's not that great a trade. That's because of the outcome. You don't know what the outcome is before. You don't know what the outcome is before you take the trade, do you? So we can't determine great trades because of outcomes. We can only determine great trades because of the setup that you could follow. So the second question, Peter, is if you think it is a great trade, do you think you could copy it based on these elements? So you see a diamond setting up. You see a top edge that you can draw. You see a voltic and you see a block. So if you can now copy that trade, you've just made $200. If you can copy that trade 5 times a day, you're now on $250,000 a year. Congratulations. And that's on a single contract. You're on $250,000 a year on a single contract. So you can always already recognize that in the next 12 months, you should be trading $1 million a year without any trouble. And you're trying to find 5 of those trades a day. You're trying to find 5 of those $200 trades a day. If you can make $200 on them, you might not make 200, but you'll find a lot more than 5. I can guarantee you that. You'll find a lot more than 5. So what we're trying to do here is we're trying to re-engineer that whole process, aren't we? We're trying to re-engineer that process to try and get into that and say, yep, number 1, it was a great trade. Number 2, there was value in it for a great trade. I've just taken another sell, by the way, off of A06. It's just traded 95s. I've got 10 ticks on the trade, and I've taken a 10 tick profit and a stop at break even. And I've just been scratched at +1. Just been scratched at +1. So I've just taken 10 more ticks. I've taken another $100 profit. And it's not as good a trade. Now you say, what? No, it's not as good a trade. But that's the difference. You can now recognize why it's not as good a trade. Can you all see why it's not as good a trade? Anyone? Can you all see why it's not as good a trade? Just based on the shapes again, guys, nothing else. It's not as good a trade because the Brent oil trade dropped hard and fast down into the bottom edges. So the Brent oil spread dropped hard and fast into the bottom edge at the time. So the Brent oil was making a lower low phase. So that made it not as good a trade, but still a trade because it still has macro quality in it. But because of this fast money drop on Brent, there wasn't a diamond forming in the short term, was there? This was dropping, not rising. When you took this trade here, when this trade took place here, the diamond is actually rising here, isn't it? The blue line was going up, the purple line was going down. The diamond was rising. So this is a great opportunity to sell oil. The diamond is actually falling here. It's not falling by much, but it is falling. And that makes this trade nowhere near as good. As a result, we take a small trade, we take 10 ticks off that trade, we make some money, we get our stops to break even +1, and we know it's not as good a trade. In other words, because we've engineered this trade is now known to be not as good. The macro value on this trade is better, but the short-term value wasn't. So we want to try and get that short-term value. Now, is there going to be another opportunity to get a better trade? Hopefully. Because obviously if this orange line starts to diverge, which is Brent, and this line's still going higher, if I get another lower low on this purple line, red line narrative here, if I get a lower low here, I am going to smash this oil out of the park for a home run. I'm going to smash this out of the park for a home run in here. So that's what I'm kind of looking for just now, is that opportunity to get a stop run top line. 76 10s, 15s would be brilliant, but I'm not expecting to see it, so I'm going to deal against leans. I'm going to deal against some leans. I'm going to try and make some monies off it, and I'm going to start working the top edges because I am only a seller of oil just now. This tells me that I am only a seller of oil. If this is going up, and if this is going up, I am only selling oil. And what I've got to try and do is capture the diamonds during that period. Here, try and capture the diamonds here, try and capture the diamonds when they show up here, preferably into lower lows on this chart, preferably into divergence that's getting bigger and bigger and bigger. But obviously, you still have to pay very close attention to the short-term drop that's coming in here and here, and that's going to put a lot of pressure here, which means you don't just jump in, you wait for perfection. You don't have to rush it. You will find it. Perfection will show up on the screens. So if we can get a stop run on this, we're in pretty good shape. We're in pretty good shape. We are expecting a stop run, but we still need to find some buyers at the moment, Stuart, and there's just no buyers showing up at the moment. If you look at the market deltas, they're all selling, so I think they have to try and jam those sellers first and then go for that stop run, and that's when the trade starts showing up. But it's got to have the value in it to get that trade on the books, and I think we've just seen it there. We've just seen the stop run finally coming in. The sellers were finally getting jammed. If you look at the book there, the sellers got jammed, and they've managed to jam the price higher into that 15 to 20 price area. Now, I'd like to see it a little bit higher still. I haven't seen any book sellers coming back in yet, so I'm not quite getting ready for the trade, but I'm getting close to being ready for the trade. Why? Because this has made a lower low, because this has made a lower low, and this has made a lower low, and so is this. So where's your advantage? Where's your advantage in the short term there? Very limited, correct? So because it's very limited, you've got to be absolutely pristine with your pricing on that trade. Absolutely pristine with your pricing. So what price did you guys get? I'm booking some profits just now at the 04s. Moving some orders about at 0405. I'm taking my first profits out of that at plus 10 ticks, guys. Nice. Pristine prices. What do you think, guys? Pristine prices. Did we get what we wanted there? Did we get what we wanted? Yeah, we're only selling, remember, guys. We're only sellers. So did we get what we wanted? Absolutely. So how did that trade turn out to be the perfect trade? Well, it wasn't perfect in any way, shape, or form, because this was making lower lows, but it has a macro quality, which means we have to trade at macro prices. We have to trade at macro prices, right? So when we look at that last trade, did we have the same quality of setup? Let's take a look. Does everybody agree that that's the trade that you've just seen? Everybody agree that that's the trade we've just put on the screens and we've just seen it on the charts there, yeah? So you can see where my trade was. Do you see where my trade was? It's one tick below the Baltic, correct? It's one tick below the Baltic. So my trade was at 15. We've just seen the price drop to 0 for 15 ticks. So where's my hard stop on that trade? Well, usually I'm going to put my hard stop not directly above the Baltic, but a few ticks above it. So I'm going to go into a hard stop perhaps around about 21, 22. So I'm going to give myself about 7 ticks. I should never be taken out on a hard stop. Never. So what I'm trying to do is get my stops into break even, which I achieved within the next 60 seconds. I'm able to get my stops into break even. We took 10 contracts out down here for 10 ticks, 15 ticks. And we've got 10 contracts left in the marketplace, and we're making some nice money. Now, if that goes, we're in it. And if it doesn't go, we get scratched out at +1 or +2. So we're again doing the pristine stuff. We're doing the perfect trades. And again, Peter, it comes back to that idea that we make it look easy because we just follow the same process. Is that not exactly as we've just shown you in class, guys? Yes or no? Am I doing anything on that trade that we haven't just covered? Is there anything on that trade that you guys can't copy? It's the right price. It's the right area. It's the right structure. It's the right values. It is now dropping nicely. $1,500 profit. It's not a brilliant trade, but it's a good trade, and it means that we get the right price. We know we have to get that macro higher high, otherwise we don't take it because the value short term was going against us here. You can see that short term value was going against us. So we need that extra higher high on oil. If we don't get the higher high on oil, there's no trade for us. There's no trade, and you can see that the value's improved here, the value's improved here. So I want to try and work that order and maybe even try it again. We maybe get another chance to go into another diamond, and that diamond's getting bigger and bigger and bigger as it goes, right? We're getting more and more and more value into that diamond as it goes through this top edge price above 77. So we just watch this evolving storyline here. This story looks really, really good at the moment. So I'd love to see oil running another stop at the top edge, and we could absolutely smash this one out the park again. But the more it builds, we just obviously have to pay attention to the other picture that's developing in the background to make sure we don't lose sight of some of the other macro narrative drivers. And those other macro narrative drivers are things like this euro dollar that's rising. So we can't ever lose sight of this, Peter. We can't lose sight of the euro dollar rising like this. That's something that you might have taken your eye off of because you're so focused on looking for diamonds that you lose sight of the fact that the dollar's getting weaker. So that's going to put a buyer into oil prices at higher levels, etc., etc. And you've got to, and if you lose sight of that, that's when things can become a little bit, you think, why did you make money and I lost money on this? I don't understand. I don't know what I did wrong on this trade. And it's because you've taken your eye off some of the other drivers, not just the other big markets in the background. You've taken your eye off the things like the euro dollar, and that's where your problem is at times, isn't it? That's where your problem is when you're trying to trade these things. So yeah, do not lose sight of the bigger drivers as well, guys. I think that's where a lot of people do make mistakes, because if I now put the diamond onto the overview with the euro dollar in the charts, take a look. You see what happens? That black line causes you a lot of problems now, doesn't it? That black line is 1 over euro dollar. So the black line now causes you serious pull-up problems. If I'm trying to buy the purple line or the red line at the bottom edges, against the 3 value lines, which are now the blue line, the orange line, which is the Brent WTI, and the black line, which is now the euro dollar, I've got serious problems trying to make that trade stick. Well, guess what? We've had serious problems trying to make that trade stick, Peter, right? So this is a good trade, but it's not a great trade by any means because of the euro dollar bullishness. If we can recognize that in passing, well, things start to become a little bit more sensible. We start recognizing that the market doesn't just happen for one reason and one reason only. It happens because of a series of reasons. And if I lose sight of this idea, if I lose sight of what's happening in here, I might stupidly sell way too much oil at the top edge. I might be way too bad at getting my stops into place. I might be way too difficult in getting the right price. And you might say, but I keep taking these diamonds and I'm 5 ticks away from the Baltics, but I seem to keep losing money. I don't understand it. Well, did you see what was happening on the euro dollar? Did anybody see what was happening on the euro dollar? You shouldn't be selling oil unless you're at those higher prints. In other words, you start taking into account some other elements that you want to pay attention to, some of the other more key core elements. It's like trying to buy gold because silver's rising. And you suddenly realize the euro's getting murdered. And you say, wait a second, it's not a buy on gold at all. It's a sell on gold, but silver's a lot higher, so I'm going to sell some silver. You've now recognized that buying gold because silver's going up was a mistake. It was value, but it was value to sell silver, not to buy gold, wasn't it? So it makes a bit more sense. It starts to give us a little bit more quality in our analysis by starting to remember that there are other factors in every single marketplace. And our job is to make sure that we build into those factors, Peter. But it's not just about one factor. We could start learning about leaning against a Baltic. That's number 1. We could then say, right, leaning against a Baltic on oil when the crack spread is moving in our direction. That's 2. When the Brent oil spreads are moving in a direction, that's 3. When the oil is moving in our direction, that's 4. We start to build the 10 steps. We start building the 10 steps towards proper valuations, haven't we? We're starting to build 10 steps to the trading floor. And that's what we start to recognize from this eventual storyline. You can see this is starting to look a little bit better now. The euro is starting to drop off a little bit here. So that's starting to look a little bit better when this diamond forms at the bottom edges. There's a lot of value in this short oil, but the diamond's now starting to form a little bit better because now the euro is just rolling off. Now, it's not rolling off by much, but it's starting to roll off. So what else could we add to this? Well, of course, the euro, if it's 1 over euro dollar, then of course the interest rate curve, we could add that to the narrative. We could add in the carry trade, of course, to the narrative. We could add in the pension funds to the narrative. All of these things tell us what direction this black line is going to be going in. And therefore, we could start getting ahead of this weakness in the black line, couldn't we? So we can't just do one thing, guys. We've got to start building these pictures. They are very, very effective in their own. But if you start smashing into a massive sell because of one aspect and you've completely forgotten that there's another aspect, you could be on the way out of your account, couldn't you? Because you're making a mistake because you're not adding enough data to your analysis. You're oversimplifying it. And you have to oversimplify it when you learn, guys. That's the thing a lot of people forget. You might be saying, but you oversimplified it. Yeah, because you've got to learn one line at a time. You hear that expression all the time. As you learn these things one line at a time, but you've got to build them all back into your narrative, haven't you? Where are we? What price are we at? What time of the day are we at? What's the value doing? Why is the euro going up? Why is the euro expected to start going down? Can we take advantage of that on that oil bottom edge? We start looking at that as a story. We start building out that storyline and we start trying to come up with answers that make sense. It's just a process of learning. Going back to the car analogy, you learn to put the clutch down when you want to change gears. You put the clutch down too soon, you change gears too soon, you're in first gear when you're still doing 30 miles an hour, you go through the windscreen and you say, oh, I'm not going to do that again. I am not going to do that again. I'm going to try and learn this a little bit better. I'm going to try and learn a little bit more, blah, blah, blah. So yeah, it is a good analogy and it makes sense. There's another little sell trade I've just taken off the 20s. We've just traded 14s. I'm trying to make some money on this trade. I'm booking some profits because I've got a fair amount of size in this. I've managed to get into a double figure trade on this on our own account. So we've just sold double figures on the uptick there into that oil. Do you see the lean, guys? Everybody see where the lean is? The top lean was at 23. The top lean was at 23. So the price I would expect from you guys is 22 or 21. Worst case, 22 or 21 worst case, guys. I don't want to see any 19s. I don't want to see any 18s. That's garbage. Don't all type in at once.